All right, we're trying this on the road. Probably shouldn't, but anyway, you're riding along with me today. It is Tuesday, May 21st. Trying to fly home. It's my daughter's birthday. We now have a teenager in the house. It's kind of shocking. Everybody says you gotta enjoy this time because it goes fast, and I think that's accurate. Things do go fast, but so in grains, we've got a lot going on. We're approaching some targets we've been talking about for quite a while. I want to talk about wheat specifically, and then I'll follow that with corn and soybeans and canola. And hopefully we can fit this in a nice little 8 to 10 minute package. We will see. Anyway, so we start out the week up 38 in Chicago. The big driver is Russian dryness. They just aren't getting the rains. And there's nothing in the forecast. There's one model has some stuff coming in, but it's followed by big time heat. If that happens, we're gonna make another notch up. ICAR, which is another analyst in that area, they sent out their update today saying it was Russian crop was down to 83.5. Remember, I was at 85, and then ICAR came out at 85, and then Sovicon came out at 85, and now they're dropping below me. And I think that's accurate. I base my numbers just basically on weather. I don't have anything else to go by other than weather and just some contacts who can explain what stage the crop's in. There's really not much else to use. Sovicon, he's kind of the political mouthpiece, so he's a little different. You got to take what he says with a grain of salt. Sometimes he's flood the world with wheat drum. Other times he's wanting the price to rise. You just don't know. But at the end of the day, I think his numbers are probably more accurate than USDA's. The market certainly acted that way last year. Looked that there was more Russian wheat than USDA presented, and he's already 5 million metric tons under USDA for this year. Anyway, so the red wheats, at least not the red wheats, the hard red winter wheat, you can safely do a hedge to arrive now and know you're going to come out all right. I'm confident the basis will be good. We'll get at least a plus 80 to hopefully $1. And that's going to equal, that's going to get you above cost of production pretty good. I am not scared of that. So if you want to move to 15% of that, that is just fine with me. Hard red spring, DNS, it is not there yet. And the chart looks, actually better than Chicago, and it's cleaner than Chicago. I would not be surprised to see, that market continue to grind higher, face some resistance today, but they've got pretty good conditions up there as a whole, so that's probably going to pressure it. Point being, I think you need to be picky there. Wait till you get some numbers you can know you're going to break even with, or not break even. We don't want to break even. We want to make money at this job. So wait till you got some margin in there, and then start locking in some hedge to arrives. Chicago, as far as like white wheat goes, we're at 735 on the December, so we're 15 cents away. My original target was around that 750 mark. 15 cents away. We could be there tomorrow. We could be there tonight. We'll see. I think that's worth 10%. I'd really like to get the first 15% done between that $7.50 and $8 mark. We can make money at that. White wheat wise, the basis is horrendous right now. Portland's kind of been playing games with us all year. They knew we carried over a lot of wheat in 22, so they were doing their best to make us pay. At some point, premium wheat's got to go back to premium wheat, and we've got enough weather damage this year that it's not going to be a bin buster. We might be lucky if we get average the way it's looking for a region. And if that's the case, you know, after a short crop last year, we're going to have to move back to premium prices. As in Australia, you know, the western half of Australia, they're struggling to get established, and that's our competitor for white wheat. So if that's the case, white wheat has no business having a negative basis. It needs to catch up, and I think over this year you'll see that. You know, for a while there, I was thinking plus 20 might be it. And if we had a record crop, I suppose maybe it would be, but we're not going to have that record crop. Bushels are coming off every day. So I'm you know, more confident that we can see that 50 over basis. Like, you know, it's still below what we're used to, but it's an improvement over this last year. So that would, you know, a 750 sale with the 50-cent basis, $8 Portland wheat. So yeah, get your targets in there. Get versed with it. If you don't understand the hedge to arrive concept, you've never done one, you're nervous about it, please call. That's what I'm for. That's why you hire me. Let's just walk through it, and like I say, it should be $8 wheat, and there's a little more risk presented this year than normal based on the you know, the political events, the election, and the geopolitics going around the country or the world. You know, with the Iran leader dying, what does that mean? What happens now? Does that mean the next guy's crazy and wants to wipe Israel off the map tomorrow, or does you know what's next? I don't know what's next. Or is he a calm guy that settles things down in the region? I don't know. So they say there's so many unknowns. Probably more unknowns this year than we've ever had. So more outside factors than we've ever had for a market. Supply and demand is just kind of a sideshow at the moment. Right now we're trading supply worries. We're not trading demand yet. That'll come probably in the fall. And I wrote in my last report, and I hope you paid attention because it's important. Makes my life easier. Will make your life easier, and hopefully you'll just understand my role. I'm going to position my position, you know, the KDI position, to try and maximize the most amount of sales where the market looks the best. Okay. For example, you know, we sold some last fall, we sold some ahead of time, and then we basically shut the bin door till May, right? We had some, I guess, right before winter, and then we just said, nope, we're done. This thing looks ugly for a bit. It got really ugly. Had no idea it'd get that ugly, but now we're coming back and we're making sales again. We're starting to make sales again. So your job is to situate your cash flow to, you know, like for example, I'm expecting some sort of a peak in this market sometime in the next, you know, excuse me, 2 to 4 weeks. So we could have a pretty good peak here. Maybe it goes longer than that. I don't know. But we're trading supply. Supply worries are always short and sharp. And once that peak hits, I would expect harvest pressure to take over. And the harvest pressure will run us all the way through, you know, could run us till fall, depending on what the Corn Belt does. And then we should see demand move into these wheat markets and propel us the rest of the season. And hopefully have a demand-led market that's developing this fall. So with that said, I might move to 15% sold with hedge to arrives. But if you're a guy that wants 60% of your cash flow in September, you need to be more aggressive. You need to push that to 40% or 30%. You know, get that sales percentage up there where you need to be, and you know, and dribble the rest out as we go through the rest of the windows for the year. And that's a very important point. And like I say, my reason is to try and point you to the best sell window. You've got to manage your cash flow. So anyway, so we're right there. We're at 750. If we can get 750 to $8 started on Chicago December, that's a good starting place. I feel like we can get $8 out of that. You know, if it's not there, if we're still at a negative basis by November, we're going to push that thing to March and see if we can't get that to set up. If you're a guy that has to sell a bunch up front in September and we're still dealing with a bad basis, we're still going to push that thing out to December or March, and then you sell the cash wheat instead, whatever it is. If we're dealing with a negative basis, that probably means we're still elevated. We're elevated price-wise. It's usually when Chicago drops and is not rallying, that's when we get our big basis numbers. That makes sense. So, corn. All right. So the chatter on the corn is just bearish. Everything you read is bearish, except for South America. That's not bearish. I've heard one guy talk today, another analyst I respect. He was talking about how horrible the Brazilian crop is, just saying it's a train wreck. But at the same time, people are becoming bearish in the U.S. because we're starting to get a good moisture base. It's May 20th. We've got 30% of the crop to go to plant, and some of that's going to get late, but I don't think it's going to knock enough bushels off to matter. At the end of the day, it still comes down to, you know, your late June, July weather. That's going to determine the corn crop, and we don't know. If the heat dome comes in, we're going higher. If it doesn't, we're probably going to have a big crop. So, I mean, that's just the corn story. But point being, you got a lot of bearish chatter on there from that. But when I look at the corn chart, it doesn't look that bad. I feel like it's developed a base. It's just like a month behind wheat. I feel like it's ready to move. And it's like, okay, we're going to give it a little time. I got old crop I need to move. I got some new crop I need to get caught up on. But I'm going to give this thing a little bit longer and see. We had a good start Monday with wheat up 38 and corn following along. It was up 7 or 8 or something like that for the day. Today corn backed off a couple, but not much. We'll see. I don't know how many bushels the U.S. grower is going to sell with wet as it is, having trouble getting their last bit planted. Soybeans, the same exact thing. It's got a more bearish balance sheet than corn does, and with the late planting going on in corn, you're probably going to see a few acres get switched over to even more soybeans. But the chart looks good, and I look at that chart and I think, man, that is not an ugly chart. It looks like it's ready for the next leg higher. So I'm going to give it a little chance to do so. Charts aren't perfect, but when they're set up like they are, it's usually best to wait and see if you can't get that thing to move a little bit. So I still like to remove my old crop around $13. Don't know if it'll give it to me or not. There's a big gap up there in the charts. I think it needs to be filled, and if we can get that thing moving, so be it. And you say, well, why, with supply and demand so heavy, why would we do that? And you just got to understand, with, you know, silver and gold making new high closes, and a lot of commodities starting to follow along. I mean, you got cattle there, you got cocoa was there. Index fund buying combined with a hedge fund short covering is enough to move that market, and it has nothing to do with supply and demand. So anyway, that's my thought on soybeans. But I just want to give that a little time before I start, because if you read the wires and you read just the narrative of soybeans, it says, all right, get to 50% sold next year and sell everything in old crop and be done with it. That's what I'd like to do. That's what my emotions want to do. It wants to liquidate it. It's the same emotion I had when wheat was down there in the 5s. Had no business being that cheap, but my emotion was like, it's worthless. It's not even a feed grain value anymore. So why keep it? Well, look what's changed. So it did not take long to make that change. So canola, the chart looks good. It's got a similar hedge fund position as wheat. They are almost out of that position, and once they get out of that position in neutral, I'm probably gonna be done with canola. Unless that thing's going straight up, I'm probably gonna say thank you and be done. And might not be a bad idea to get some new crop on it as well. it's going to follow the soy complex, but bottom line is how far can it move with the supply and demand? Is canola going to get the index fund buying that corn, soybeans, the wheat are? Probably not. So it's going to be related to soybean oil like it always is. Anyway, that's about it. I'm not sure how long I've talked. Probably longer than I want to. It doesn't say 15 minutes. I hope it's not 15 minutes. Anyway, so get your targets in there. Get that first round of hedge to rise ready. Please call me with questions on those, because it's important to get those. Yes, we could face negative basis for quite a while, but the way white wheat's shaping up, man, you got to think we're going to be clawing our way back to normal. And that's what the hedge to rise for. You can sell harvest cash right now with a negative basis, or you can sell the futures higher and wait for the basis to catch up and make that gain. And that's what I'm trying to do. There's no good cash sales right now that I can see. I mean, old crop's getting there. We're 25 cents away from marketing year highs. And maybe we'll get that. If we get that, then get above that. That's where I'd like to liquidate the rest of old crop. If it gets heavy and looks like it's not going to happen, I'll probably liquidate old crop. So anyway, that's my position in a nutshell. Anyway, hope some of you needy guys get some rain. We're not. I mean, I figured this would be an upslope event, and it is. It's been raining all day right across the river from our place, which is aggravating, because I can see Mount Hood. I can see the Cascades, which if a storm's coming in, you shouldn't be able to. But with these downslope or upslope flows, it'll pass over us, reconfigure, and start raining east of us. So pretty typical. Nothing doesn't surprise me. At least it's cooler. At least there's some moisture in the air. It's better than April. April was awful. Anyway, hope you're all having a good day. Bye.